morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
This range reversal setup has the potential to trigger a massive squeeze today, and the clues are written all over the charts. We've been tracking that key 60-minute range for days now, and this morning's price action is finally responding. But here's the twist. Yesterday's strong FOMC-driven breakout higher complicates the picture. When you combine a powerful post-FOMC impulse with the range reversal, you end up with a market that can punish anyone who guesses and reward the trader who understands timing. That's where our edge lies this morning. Good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and prepare for today's trading session. As always, take a moment to subscribe and explore the resources linked in the description below. Really quick shout out to everybody in the chat. I see Henry's here. Good morning. Robert is here and James. How you guys doing today? All right. What a move yesterday. I know I talked to James last night and we were watching it right kind of at the close. And we had talked a little bit and then I wake up this morning and I'm like, what the F? So, let's put a trade plan together today. What a range, and what a failure. So, with that said, right, I know the news is talking about, which again, maybe there's some reality to it or not, but Oracle came out yesterday with their earnings release, and you know that's what everybody's using as a scapegoat. That hey, Oracle came out, their earnings missed, and I think revenue and earnings missed, if not both. The right, so missed on revenue expectations. and they're down. And then right when they started talking, really talking about CapEx, and where they're not really getting a return on that, you know, it kind of started bringing down a little bit of everybody else, right? Like Microsoft, Meta, Amazon, Nvidia, all down. So that's the story, you know, the qualitative story that's out there. You know, if anybody knows me, I'm not a big storyteller. It's probably the worst. It's probably a bad, you know, a weakness that I have. I'm not good at telling stories. I'm more a math guy, right? So a lot of my everything that I do kind of revolves around quant thinking. So with that said, you know, we can get into the charts. I don't think I have anything too much to say as far as on the news. I did like Henry's quote. I know he's fucking with me about the mortgages. I had to really early today. I was like, because I didn't look at this, the mortgage rates. But you're right. They didn't. They didn't pass on those interest rate cuts to us guys on the mortgage industry. So, a little joke this morning. Anyways, we're all messing around. Watched, right? So FOMC came out. I think everybody will watch this, but we already know this from looking before, the probabilities. Right, we knew after today or after yesterday, right? We already had that they weren't going to cut, you know, really that first quarter of 2026. But what we were looking is, where does the change? They still got the 2 cuts, 1 cut in spring, summer of 2026, and then another second cut. So there's still just 2 cuts in the curve for the Fed funds futures. The one thing I want to discuss, and that's it. I mean, there's not too much after that I want to discuss here, because I really want to get into the charts. But I think it's important just to kind of reference a few things after yesterday's meeting and the presser. I mean, forget the price action just right now, but a couple of things that I noticed in the SEP and the presser, right? I do want to say that the presser yesterday was super dovish, right? And I'm hopefully the one thing that maybe you can learn from me, or maybe you already know, but something that is really to my personality is I watch what people do, and I'm less about watching what they say. You know, people talk shit all the time, and that's how I just in my head think of it. And I don't mean to be raw, and, you know, I'll probably swear a lot here or there. And I know the wife's going to yell at me again. But I am just that raw of people talk a whole bunch of stuff. You're going to hear jibber jabber from human beings your whole life. But if you really want to know that person, watch what they do and less of what they say. And so when I watched Powell yesterday, and I'm listening to his jaw jabbering, you know, he's talking about, you know, there's many questions that he was asked. He's talking about inflation. He was asked about growth. He was asked about inflation. And this is what I want to take, is in their projections in September, they projected growth, right? The real change in GDP. In September, right, it was 1.6, 1.8, and into 2027, 1.9. Now, they assessed it, and now they're saying that there's decent amount or a rate of change higher in growth expectations. We go from 1.6 to 1.7. We go from 1.8 to 2.3. We go from 1.9 to 2.0, right? So you have an expectation or a projection that growth is higher. Okay, so that's how they're assessing it. You also have unemployment rate, right? That again, unchanged, but as we get into 2027, lower, right? So again, these concerns that they're having, or he jibber jabbers and was talking, or they're talking and discussing, is that, you know, there's some concerns of the labor market and jobs, but yet when you look at the growth section in their projections, it's increased. So they expect more growth. Now, as we get into inflation, right? What are they looking at? So here in September, they projected 3, 2.6, 2.1. And now as they revised it yesterday, it's now 2.9, 2.4, 2.1. So their expectation on inflation is down, right? So here you got monetary policy, inflation down, growth up. And instead, the talking is this: we're gonna cut rates. You know, so, and in the right, we just looked at the probabilities is 2 more cuts. And so this goes back to, what are they saying and what are they doing? And, you know, so you have this higher growth. If you're expecting higher growth and inflation to go down, right, you almost want to pause. Now, again, he did talk that there's, right, there's market participant, or the board of governors and everybody, the voting, the participants, right? There is this kind of back and forth. Everybody is agreeing that there is some cracks in the labor market. Although, right, real GDP, they're looking for more growth. And their inflation is higher than their 2%, you know, target, and we're sitting at 3s. So there is that. But I just find it, you know, when I'm trying to assess the position of the Fed, are they, you know, hawkish, dovish? It just seemed that when you're writing a projection down of higher growth and inflation, you know, moderating, but yet still above your 2% objective, you would, you know, the doing, like, how would you do, what would you do in that scenario, feels like, or I guess maybe I'm assessing it and I could be assessing it wrong. I feel like I would, you know, either leave rates this, you know, unchanged, and even maybe a slight, you know, maybe throw in a hike, right, to get this inflation lower, you know, because you have this projection of growth is, you know, moving higher. So if I'm expecting growth to move higher in the future and not flat to down, then I feel like this is okay, and then this is the part of the balance of my charter to, right, get that price stability down. And I think there's a couple questions. One person asked, you know, you don't hear people talking about my job, my job, my job. What you do hear people talking about, and I had to agree with this, and I can't remember who asked the question, but they talked about most people's frustration is prices, right? Housing prices are too high. Cost of going to the grocery store is too high, right? There's this inflation, this persistent inflation that's too high. It isn't, oh my God, my neighbor lost his job and Susie down the road lost her job, and, you know, we're worried about jobs. I don't feel that. Now, again, forward thinking. I'm not going to say that the NFP and the way we're collecting the labor market information is incorrect, and we are losing these jobs, and the numbers are incorrect. And he did make a comment where if the we're saying we're the delta is around 60,000 jobs. So if we're reporting 40, technically we're doing negative 20. So there is this kind of large discrepancy in the calculation. So, are they trying to get ahead of it? Possibly. But again, we're speculating. So there's a lot of speculation, but when I see what they're doing and they're writing these down, and that's the information that they're going with, then why not pause? And the economy's doing all right, and we're in that kind of balance area. So anyways, I just thought my take was it was a very dovish with the information, the data given. I thought he was kind of leaned on the dovish side, as well as market participants, right? Like nobody's got anything geared in for hikes, right? That is not even a discussion. It's, and even the pause much isn't so much of a discussion. It's, well, how many more times are we hiking? Or, are we cutting? So, anyways, that was a take, my shitty 2 cents on that. The one thing also, I know we talked about this yesterday, and we talked about it'd be nice if we got a little clarity, we got a little distribution of where market participants are thinking, and we got the complete opposite. I kept this up because I wanted to show like where market participants were in September on the dot plot and where are we in December. And, look at what we got. So going into 2026 is we got literally no distribution, no consensus whatsoever. I mean, when we got September, there was a little consensus right here at around 3.6, 3.75, 3.5 to 3.75. And instead, we just got more uncertainty. These all stayed the same, going out to 27, 28 in the long run. That all, for the most part, stayed the same. I think the only thing that really changed is the long run at 3%, right? A little bit of distribution, consolidation at around the three handle. But other than that, you go into 2028, 2027, there's not much change. That still looks the same. But in the near term, going into next year, as we're going to finish out 2025, this to me, when I look at this just tells me to expect in 2026 some volatility, right? Because as markets are putting positions on and there's not clarity, you're going to get a lot of dispersion. And then, right, which will make markets move if they're wrong, right? Somebody's going to be wrong because you're going to look at this and say, construct a portfolio, right, with not so much of a clear sign of where we're going. We could have 4 or 5 rate hikes next year, or we could have 0. And so, right, going into next year, if you have to, you can't do nothing. There's not a static time in the market where you can't do nothing. You have to put that, every day people are working. They're getting money taken out of their 401k. That money is going somewhere, even if it's passive, right? And so it's not like human beings are working and that money is getting taken out of their 401k and they're just saying, just put it in cash, because we really don't have no clarity. No, their bullshit financial advisor is, just doing what he's told and putting your money in allocating in some passive 401k program. And again, if that, you know, as that's either right or wrong, but if it's wrong, right, there's a lot of volatility and unwinding and position moving, rotating, a lot of rotation, and that just kind of makes for a volatile kind of year. So that's what I see. Yeah, I mean, that's how I just see it's a little bit more work, right? I always talk about investing or trading. This is on a spectrum, and I know I've said this many times, and I'll keep saying it, is there's times in life where life is easy, and there's time in life where life is hard. And this moves. This doesn't stay static. You know what I mean? And this could be a day-to-day. This could be a month-to-month. This could be a year-to-year, right? But there's times in life that are easy, hard. In trading, it's easy, hard, right? The spectrum. And so when I see this, I just see this moving, maybe we're here, and I just see it moving a little bit over to a little bit more of the hard, right? Because there's not clarity. And so, there's a lot of unknowns. And, you have to do something. You have to make a decision as human beings. You're driving a car. You have to, brake, gas. I mean, you just can't throw it in park in the middle of the expressway. Right? You got to be constantly making decisions. I guess you could. That's a decision that you could make. So, I mean, but the reality is right, there's decisions that are being made, and when there's not clarity, you're kind of off the cuff, and you're a little skittish. There's not a lot of conviction. And then if you're wrong, it's easy to get out, right, with less conviction. You just get out of the trade, or you move money from one thing to another. So anyways, wow, did I kill that horse to death. So the bottom line is that didn't give us any clarity. It gave us more uncertainty, and going into 2026, I think that's going to be a problem. Whew. Holy cow. All right. It's 8:45. As of 6:45, I came in early to the office today. So I was writing this earlier than usual. We are currently negative 26 points. When I wrote this at 6:45, we were negative 31.75 points. But we did have a very light, right, 0.75% net long volume delta. So again, from the close, even though we're negative, right, in price, the advertising mechanism, volume is 0.75% net long volume delta. And again, telling us that positioning is neutral at best. We are opening in balance, and the 10-day ATR has compressed. It keeps on compressing. Remember, we were at one point at 90, almost 100 points ATR, 10-day ATR, and I think yesterday we were 52 points, and now we're 48. So that keeps on compressing a little bit. Big picture for the ES shows a neutral market sitting inside a well-defined range. We know that range. We've talked about it many times. We'll look at it again today just to kind of keep it on the top of our mind. I will be looking at trading day trade setup number 3. That's going to be the primary focus today. And then I will be looking for, as the day progresses, day trade setup number 5. And again, as we get into the trigger chart, I'll show you how that transition will shift and what I'm looking for specifically. The key levels to watch is exactly the same key levels. I feel it just remains unchanged. We cannot break out of this volume distribution node that we've been playing in for literally, it's 2 weeks, right? Tomorrow will be legitimately 2 weeks of trading in this sideways range. So 68.1075, even though I'm neutral, even though we're trading in a sideways range, right? The last push was a momentum push by the buyers. So again, buyers legitimately still have control in the larger, bigger picture, but with the big but, ... I would say after yesterday, I mean, again, like, who had the gift? I mean, I know the other day we were talking about if sellers, I think this was on Monday going into Tuesday, if sellers were really going to, really push and buyers were going to throw in the keys, right? Then they should have took it down. And then it's like, if this happens, then this should happen next. And then they didn't. And it kind of gave us like, okay, it's still bullish. And we came in, yesterday with a bullish kind of bias, neutral to bullish bias. And then today, we should have been able to push higher. So in talking about that, let's just get to the charts. Again, the strategy today is less about prediction, but more about clarity. I do want to say that when you get this kind of, and as a trader, and again, I sometimes feel I know what most traders are dealing with, because as a real trader, I deal with those same situations. Is there will be times in the market where literally you have analysis paralysis. And so I find, as something that helps me, when I have those days of analysis paralysis, one, I let the setup, I have 15 specific setups, day trade setups. They're all on the website. And so I have 15 of them. And when I don't have like really good conviction, I really lean hard on just the setup. And I let the setup tell me. I do less predicting, right? Less prediction and less forecast, right? And more just let the setup play out. And again, if this setup is correct, then this should happen, and not get egotistical, not get prideful. Just, if I'm wrong, like, just get out, right? It goes back to that conviction and skittish, right? The trade plays out, and if I see any little bit of problems, just get out. There's another day. I mean, if you take this job seriously, and this is your job and your profession, this is your craft, then tomorrow you're just going to go to work, and the next day you're going to go to work, and the next day to go to work. So, don't get hawked up in this, I got to make $1 million in one day's trading. This is about a living wage. This isn't about to get rich. This is about, you could work as an engineer. You could work as a cook. You could, any of these professions in America that you can do. And this is no different than any other profession. You're just getting a paycheck. So take it as a paycheck. A lot of times, if you do this long enough, you'll see certain times in the market that you can really capitalize and take advantage of a clear opportunity and make a killing in a good trade. But for the most part, right? Like, don't think you gotta like hit home runs every day. Take some base hits, just base hit. And then when the setup does, it'll be so clear as day. And you'll have so much conviction, and then that's when you press. Otherwise, it's just a normal day. So again, after yesterday and today, especially these big moves, as a trader, and especially when I was early on trading, you'd get, maybe your heart would race, you'd get excited, all these things, and, just slow down a little bit. Again, make sure you get more clarity in the move. And that's probably the best advice I can probably give anybody going into today. So with all that said, I feel like I spent a half an hour and we haven't even got into the trade setups and actually trading in the charts. So with that said, Yesterday's move, that should have been an easy, this should have been, again, how do we talk about this spike in channel? It rotates, pulls back, and then breaks out, right? And then breaks out. That's how that pattern plays out. And then what did we get? We had that pull back off the spike, which is priceless. And then we busted out. We had the catalyst of the FOMC. You know, yeah, maybe we could have had a little bit of pullback, but it could have should have just what's the word I want to say? A tight pullback, and then we would have came in today with then the move to all-time highs. Now with yesterday, and whether it's Oracle or not, however you want to say, but the price action tells us they rolled this thing over, and not only did they roll it over, they took out yesterday's low, right? So again, going back to simple stupid, and I'm just going to go back to this real quick, and then we'll go back to that chart. If we take this out and zoom this in, we talk about the market one-time framing, right? Where you have a high of day and a low of day, and then the next day shifts over and it makes a higher high and a higher low, and a higher high and a higher low, right? And so here we were making lower lows, lower highs. We had an inside day on Tuesday, and then yesterday come in, we take out the low, we take out the high, but again, you're going to have a lot of volatility on FOMC, right? And then in the overnight, it rotates and we take out and we make a lower low, and right now we're at a lower high. This obviously isn't done forming because it's today's candlestick. But, if you're taking an assumption that we're going to rotate back up and take out this high in one day and make like a broadening pattern, let's just say like over time, this ends up being some broadening pattern right here, right? Which it could form. But I would say if anybody is day traded and back tested, this is very uncommon. Again, nothing is 100%, but it would be very uncommon to have this inside day, and then you have the next day move over, take out the low and the high, and then the next day move over and actually take out the previous day's low and then come in and take out that high. I mean, that is unprecedented. I'm sure if I back tested that, there's going to be some situation where it's like, oh, Jay, I found one freaking example or two examples in what, 10 years, 50 years? I mean, how many times do we got, how much sample size do you got? But that's super rare. So not saying it's not possible, because I guarantee you in my life, like, I've not had like a one-off, like, hey, this is the first time this has ever happened thing happen in my life. As back testing, if you're a good quant, thinking like, oh, I found the newest thing. And then when you back test, you're like, nope, it's done it before, one other time. And you saw this is the second time. So I don't want to come into this and be too cocky and say like, hey, this can't never happen, and then watch it. I eat my words and it happens. But I'm just saying, on a probabilistic scale, like this pattern where we open up today and it takes out yesterday's FOMC high at 69.08 is highly unlikely. This pattern setup. So could it happen? Yup. And I bet you if I back tested it, I haven't back tested it, but I'm just saying I would be shocked if we, in the overnight, that move lower and then we take out the high of yesterday on the fact that we took out the low of yesterday, right? This thing rolled all the way over and took out yesterday's low in the overnight. So when I look at this whole pattern on the hourly time frame, this just looks like a failure to break out on the high. So again, if, then. So when I look at this, if this is a spike in channel, and we get the pullback, and we have the catalyst yesterday, and if they broke out to the upside, then this pattern should have pulled back and kept going. And what happened? It didn't. Right? And so to hold on to that, you know, forever, you just be like, hey, that's a failure pattern. And they rolled it over. So now, on a failure, right, as we move forward, this has the propensity to really squeeze the longs and roll back over. And again, kind of what we talked about yesterday a little bit, where this whole pattern fails, and right, obviously not in one day, but this failure will kind of mark the starting. And again, you know, it is the start. And that's the hardest thing. That's usually the hardest thing as traders, is catching that correct inflection point, that timing the market perfectly and catching the reversal of a move in any given direction. It's always tricky. And so that's why I say, like, you know, whether you're going to go long today, you're going to take shorts today, I would just say be nimble. And if I can give any good advice, you know, try to look for clarity and conviction in your positioning. Now, for me, I'm trading day trade type 3, and let's just get into that right now. Let's go to the trigger chart. Right? I am going to look for day trade type 3. So, day trade type 3 is more of a balancing trading range situation. Oh, I know, before I do that, let me go back to this chart. I'm sorry. Right? I do want to make note and understand if somebody's new to this watching, right? We've been talking about this now all week since the Friday a few weeks ago, right? Where we kind of got up and over 68.10 and 3/4, right? This LVN, and then we've chopped and traded in this range and chopped in here, right? And so we've built out this volume node in the course of over time, right? And so this is still building out, and we're still in it, right? Price is opening up 68.65, and we're in it. We're in the right in the middle. And I already got yelled at, so right, don't play around in the middle. So it's not a good thing to play around in the middle, and I'll just leave it at that. Everybody who knows, right? I won't say it on stream. If you know me personally, you know the joke. So don't play around in the middle. That's a bad place to play. Anyways, that's it. I'm just going to leave it at that. I don't want my wife to yell at me. So the point of that, though, is, you know, we're building this volume node and we're still stuck in that range. Now, we're stuck in that range, but this failure of yesterday shouldn't have happened. And then we took out the yesterday's low in the overnight. That shouldn't have happened. I mean, it's perfectly fine to like break out, pull back, and then go. But when you break out, take back the whole move and some, and then you're coming back in, you know, that's a change in direction. So now let's go back to the trigger chart. So we broke out yesterday's high, the FOMC, right? This is basically the FOMC trading at 2 o'clock, right? All of this price action here is the FOMC. So the fact that we rolled over, took out that low, we consolidated, and even though this is a push up, we're still in balance. So we're in balance, and we're in that trading range. And what you as a trader should be asking yourself is, tell me clarity on where we going. I thought we were going higher. We obviously rolled back over. That's kind of bearish. Now we've pulled back in and we're stuck in the middle of the range. And so there is a trading setup in this in day trade type 3, right? And we play the edges in the box, right? But at the same token, you know, this price will tell us where we're ultimately right or wrong. And this is where day trade type 5 comes into, where, right, it's the trapdoor momentum push, right, out of balance. And so, you know, everybody knows, or most people know, and especially I know James, I had a long trade still on, and then I got taken out. And so now I'm flat. I don't say I'm flat. I'm just no positions on right now. But I'm looking for a rotation short back down underneath here, and I'll be watching for, with not great conviction, of that to try, right, as a price comes down in here. I'll be looking for two things. As price comes back down here, there's a specific pattern I'll be looking for. As this comes down in here, what I'm looking for is, do buyers come in, right? Sellers are going to try pushing. They're going to try to retest this low. And as they do buyers come in and, right, you get a 1-2 try, undercut trap, and then they take it back up. That's going to be bullish, right? And again, we'll be still playing in this range. But what I'm looking for is that not to happen, right? If that doesn't happen and sellers do come down in here and they don't get the trap, right? And I'll more than likely be short coming down in, and that'll be like, do I take the short off and flip back long? Or does day trade setup 5 come into play, and then I get a momentum push and we break out of balance with a burst of momentum, right? And buyers old business has to unwind, and we're, you know, buyers who were, you know, still profitable going back, like all these, anybody who bought, you know, back in here, they're still in the good, right? And they just close out their old position, right? Take a profitable trade. It didn't work out. It failed up here at the highs. And then do they start initiating shorts, or do they initiating, like, you know, selling, still old business, but that selling pressure adds on, and that is then the catalyst and the move and the squeeze that then takes us all the way back down to here. That won't happen in one day. So if anybody's watching this, that ain't going to happen in one day. And so we'll be able to, you know, take one day at a time and assess. But, you know, just that's how the play ends up playing out over time. And again, it's, if this happens, then this should happen. And so if it doesn't, then, you know, we'll re-strategize. But with price action showing this undercut, like, that's it. The sellers or the buyers told you they quit. I mean, however you want to look at it. Glass half full, half empty. I don't necessarily look at right now the price action as sellers are kind of coming in and taking over the market. I don't see that. But what I do see is that the momentum of the buyers, they're just not necessarily super interested, right? They're not aggressive. So, you know, anybody who's bought is probably in, and they're just like, hey, I don't want to buy anymore. And it's not that sellers are coming in and aggressively saying, hey, the economy is a shit show and I'm going to dump all my equities, or I'm going to dump Tesla, or I'm going to dump Microsoft. They're not just saying, hey, it's like a big sell. But they're also just sitting there, it's holiday season, right? Or anything else. and they're not just aggressively buying. And so when they're not aggressively buying, that's what happens. We get stuck in this trading range. It's that atmosphere. It's that environment. So I don't want to come off as like this, hey, Jason's super bearish. I'm not super bearish at all. At the same token, it's not telling me to be super aggressive as a buyer. Like this overnight price action says, you know, this isn't like just gap and go, gap and go, gap and go, gap and go, and, you know, be super aggressive. It's telling me to be nimble, be patient, wait for setups to be clear, look for traps, and then play that. Now again, if we do break out on the top side, day trade type 5 can be it's an out of balance momentum push, right? So with balance being 68.80 and a half and 68.33 and 3/4, day trade type 5 can break out to the top side, and it can break out to the, it's not a short day trade type, and it's not a long day trade type. It's an out of balance push, momentum push. You know, it is a trending kind of setup. So again, we go from day trade type 3, which is a sideways trading trade setup, and then you're looking for that out of balance move, and that's what day trade setup 5 is. But it's not a directional trade. It's just a out of balance trade. So again, as I talked about, could we take out this high and we're starting to make a broadening pattern? It's possible. It's not my base case, but I'm not so goddamn blinded to say that's not possible and just be, you know, I'm just short today. So I am coming into the market with a little bit of short bias. I am looking at shorts. At the same token, I don't hold that as the word of God. That is, you know, price has to show me that I'm correct. We start getting above 68, 80, 50, right? I have to be nimble enough and be flexible enough to be able to say, hey, you know, this market can have a possibility of rotating up. That's not how I'm looking at it though right now. I'm just looking at this move here. I don't see this as a liquidation break. It could end up being that, but I'm not seeing that now. And again, tomorrow I'll just be proven wrong. I don't mind this game of being proven wrong. I'm more right than I am wrong. So anybody watching, if you're a newbie, I know new traders, they just want like, oh, a trader should be right every day. That's not how this game works. That's not how life works. You don't make every good decision in your human life is the best and the good decision. You make a series of decisions. Some of them are bad, some of them are good. Over time, your life will be the result of accumulation of good and bad decisions. And if you make enough good decisions in your life, you'll be rewarded, you know, for making those. If you make a series and a whole bunch of bad decisions of your life, you're probably sitting as a bum in the shelter, you know, in a cardboard box in an alley, you know, begging for food. That's a series of bad decisions. So we all know, and you know, series of good decisions, you got a good wife, live in a white picket fence, and your children are decent. You know, and again, this is an imperfect world, so, you know, don't beat yourself up so bad in life. Doesn't do you any good. Take one day at a time, one trade at a time, and but this definitely is meaningful in my opinion. I don't see this as a liquidation sale. Right? I just look at that as this was a failure and a range reversal. And then we'll have to play today. I mean, this does look pretty decent as far as they accumulated, right? You couldn't get another push lower from this. and then, right, we pushed out, accumulated, we broke out, we pulled back, and that's what I'll be looking for is as this comes up and we open up in 15 minutes, you know what I mean? I'm looking for the trap short down. Now, if they open this up and they rip it and we get into here and it starts ripping, that's it. Cards are off the table. You know, I'll go long. But my first gun to my head trade that I'll be looking for is this rotation down. And then as we get down here, should I hold that short for a more? Or does this just dink around all day today, as it has been for a week now, or 2 weeks almost, and we just stay in that volume node? And that's the in real time price action that you'll have to assess. I can't forecast that. That has to be assessed in real time at that moment. Not, hey guys, this is how it's supposed to go, or this is what it's going to do. How would anybody be able to predict what that's going to do? That's like in that moment of time. You have to assess it. And hopefully you got more than one way to assess it. I mean, you should have in your arsenal a dozen ways to assess and not just one way to kind of, right? It's a collective of a few different things that you're looking at, indicators. And if you have analysis paralysis and your indicators are giving you a mixed bag, that just tells you to sit on hands. That's a feedback mechanism to sit on your hands. Don't do a goddamn thing. So, anyways, that's today's lesson. Hopefully it's helpful. And you guys know how I'm positioned. You guys know the trade setups that I'm looking at today. If you guys are in Myrtle Beach and you're in the area, again, office address. Come and see us at the office. Office phone number. Email if you're a trader. You can email us. This will go directly to us, and we'll know who you are at least a little bit, where you're looking for trading information. This is our website if you're trading. If you're looking for real estate or investment research in your long-term portfolio, or if you're interested in anything that we do as far as private equity in the private equity world, right? priestcapital.com. Other than that, I hope you guys have a successful day today. Yesterday was an easy trade setup, and it worked out great. And it's just, went to bed and whatever, woke up this morning and kind of opened up to a shit show. A little bit harder. Again, easy, hard in the spectrum of trading today. And when I went to bed, or we traded yesterday, that was a little bit on the easier part. And I kind of feel like we're waking up again today and, back over here to the harder part of trading. So, spectrum. And that's it. I will see you guys tomorrow in the morning. Shout out to James. Shout out to Henry for still here. I don't know if Earl and Lisa, I know they, usually are watching or have chimed in. And then Robert, you guys have a good day trading. See if you guys, what else did you guys say? James says, my bread. That CPI comes in hot, market will be hit with reality, hypothetically. Yeah, I mean, it's one day at a time. Again, we're kind of assessing yesterday with the FOMC. Again, if CPI comes in hot, and I know we're going to get non-farm payrolls here, and, again, that changes, as new information comes in. That's what I love about this game, right? It's never static. There is always something to do. There is always new information that comes in, and it's constantly moving and developing. This is not, I got a 40-year job, and it's monotonous, and the employees are monotonous, and people are coming in, and you end up over time being jaded, and everybody's stupid, and the whole world is dumb. That I've and again, this is my opinion. Maybe I'll get hate on it, but my opinion, going to a job and doing that day in, day out for 30, 40 years, I feel that wanes on people. And so that is the nice thing about this game, is this thing is always changing. It's always dynamic. It always keeps you on your toes. Things are always moving. And, that's a lot different. Now, if you suck at this game, then yeah, you're gonna be a bitter person. But if that in lines with your personality type, and that in lines with if you can grab onto this craft, then this can be a very fulfilling career, and it can it can be exciting and challenging, and keeps on pushing you, and it can be fun. And you end up not being this bitter person over 30, 40 years. It really just kind of keeps your energy going, keeps you young. And, yeah. So, that's what I love about it. But again, everybody's personality is different. Some people, the mundane, same in, same out, they like that. I don't know. I like the change. I like the moving and new information, the dynamic of everything. Owning businesses, going to a job. It ends up being a monotonous thing. And man, when you think about doing that over 30 years or 40 years, no wonder people over time, kind of become jaded and, just shitty people. So, anyways, my 2 cents. I'm a weirdo. So, hope you guys have a good day. You guys take it easy, and I will see you guys tomorrow. Take it easy.